Hello and welcome everyone to the Fintech roundtable here at ET Sunecon Summit 2024. My name is Miloni Bhatt and I'm very happy to welcome all of you. With a market size which is projected to be $1.3 trillion by 2025 or $1.5 trillion depending upon which report you read, the fintech sector in India is growing at an astounding pace. And it's not just about the numbers, is it? It's also about the kind of impact that it is having on the lives of people in India, especially. It's about the disruption, the innovation, but also how it's driving economic progress for a country like India. Now, all of the fintechs, all of you that have gathered here today are solving for the next billion users, because that is our topic: innovative credit, finance, and investment products for the next billion users. The question is now, of course, how do you continue to win, the hearts, the minds, and of course the wallets, right, of these customers of yours? How will you continue to do so? Also, while you improve on financial inclusion, as a goal, and also driving economic development in India. So with that, welcome once again. My request is that, we start with the introduction. So we'll start with Raghunandan here from Zolve. Raghu, why don't you tell us a little bit about yourself? We'll go around the table. Each one of you can tell us a little bit about yourself, your company, what you're doing, and, talk to us about either one of the challenges or anything fantastic that what your thoughts are on the Indian fintech scenario. This is a lightning round, so you have about a minute or two.
Nice. Thanks for that, for the time limit. Right. So this is Raghu. I'm the founder of a company called Zolve. We are a cross-border fintech. We help immigrants get access to credit in the new country based on their home country credit score. All right. So that's what we do. Currently focusing on migrants from India to the US, and we underwrite them over there. Right. But this gives us probably a completely different perspective from most of the folks here. So we engage with a whole lot of companies abroad, because US is probably seen as a mecca of fintech there, right? When it comes to financial inclusion, we know that someone like a Revolut has 92% of Ireland's population as a customers. So we're not talking about that the Irish guys are not financially literate. They are financially literate. Not that they don't have any access to traditional banks. They do. But a fintech Revolut has 92% access to that. Right? When you look at Latin America, a company called Nubank has some 70 million customers. Right? And one of the largest and the fastest growing fintechs in the world. Right? And there is another Brazilian company called Nomad, which helps Brazilians to deposit money in US bank accounts so that they can protect their money from high inflation in Brazil. Right. So there are so many innovative products, even though there is a deeper penetration of traditional banks, deeper penetration of credit underwriting in those markets also. Fintechs have been able to go and capture the market and innovated a whole lot of things. So there's a lot of learnings that we have which we can possibly adopt. We just don't have to do financial inclusion for the people who don't have access to financial services. But even for the people who have got access, there's a lot more that we can do, and that's something that we have an exposure to.
All right, thank you, Manish.
This was fast.
Now you've got to keep up.
Can I slow it down? 0.5
Go ahead.
Hi, I'm Manish. I'm founder of KredX. We are a supply chain and trade finance platform. Currently, our focus is more on the trade finance side. Just to give you numbers, like India does around $35 billion in export and around $60-65 billion import. That's roughly together $100 billion. Out of that, around $2 billion get financed. So that's the, we are talking about the gap in terms of it. And most of these exports, imports are also happening through your MSMEs, which doesn't have the access to credit. And our idea is fundamentally to give them the access to credit through the cash flow that they're generating, rather than what is the collateral or what are the securities that they're sitting on.
All right, wonderful. Kaushal.
Hey, hi. Myself Kaushal. I look after engineering at Jar, coming to Jar part. So we work majorly on two parts of it. One is savings for the users. How do this save on daily basis? And the other part is like how do they protect their savings when some like rainy day scenarios. So there comes the lending part, and yeah. So this is mostly it.
Micro savings,
Yeah,
Kaushal.
right. Yes.
Micro savings. All right. Anuj.
Hi, I'm the Chief Risk Officer of Saison India. Saison is a Japanese parent-owned subsidiary that is a regulated entity, started about 5 years ago. We are a tech-forward NBFC, so working with a lot of people here in terms of providing balance sheets and ensuring in a regulated and compliant manner we can provide access to quick financial services to customers across India.
Right. All right.
Hi, I'm the other Anuj on this panel. I'm the co-founder of a company called Freo. So we are a digital banking platform in India where we actually, our goal is to serve the next 100 million, 200 million customers. And the logic is very straightforward. I think if you look at the top 1, 2%, even 5%, everybody here on this table, we have probably 2, 3 bank accounts, maybe 2, 3 credit cards. We call up somebody relationship manager to show up. But I think the same kind of access to financial products is not true for the next 500 kind of million people.
True.
We believe that India is not an unbanked population thanks to Jan Dhan Yojana
Yes.
and Jain Trinity and all the good work that's been done by BPIs. But we are definitely an underbanked economy. Whether you look at it from credit perspective or insurance or even for that matter on the investments, and I'm sure some panelists will talk about that. And hence, I think for us, the clear goal is to be able to get people to use product A or one product in the financial life cycle and then graduate into other financial products, but not go through the hassles of where it is a rejection for them, where they go to a bank or they go to a large institution where they say, okay, I may or may not be able to serve you, because it just maybe their cost base is such that they may not be able to serve the last customer. While they, of course, a lot of other small finance banks have PSL targets, but in general, if you want to have 3 or 4 products from the same bank or same financial institution, it becomes a little difficult, and we believe that we can solve it for them. We are licensed in that way. We have our own NBFC license, we have our own IRDA license for corporate insurance as a distributor, we have our own UPI license, we are a registered UPI player. So we are able to work with banks and NBFCs at the back and provide this kind of products to our customers, while we take whatever we can take on our own balance sheet as well, given that we have a licensed entity. So we do lending, we do payments to UPI, and we do insurance. We're just starting a little bit on the savings / deposit side, where people can trust us with their deposit. So we're trying to solve for financial inclusion while ensuring that the customers trust us.
Right.
But the stat is that at the end of the day, India has like less than 3% credit card penetration, and even if all new credit cards that people want, you typically want people who have existing card holders to then change it, right? Rather than bring in new guys.
Yeah. So
how do you solve for the next 100, 200 million people? Credit on UPI is something that we are a big believer in, and we're pushing that, and we believe that will solve for that specific use case. Because that will bring the next 500 million people onto the payments plus credit bandwagon. I think we are playing there, and we believe there's a huge market opportunity, and we're trying to serve that.
all right, very interesting. Ujjwal.
Hey, hello everyone. My name is Ujjwal. I am like CEO of Share.Market. It is the wealth business for the PhonePe group. I mean, we all know what PhonePe has done to payments and financial inclusion in terms of making everybody actually have access to mobile payments. So we are trying to crack that on the wealth side. So we launched our broking business, discount broking business in last year only. And mutual funds we started a bit earlier. At this point, in terms of SIPs, we are already doing more than 18 lakh SIP executions a month. On broking side, we just launched within a year. We have crossed 7 lakh demat accounts. We are growing very fast. And the interesting part is that, like, we all know what market, like access to markets, capital markets is becoming so population scale now that everybody really cares about growing their money. So we are trying to solve that problem at a very massive population scale. And in that capsule, there are some interesting insights. For example, if you look at the last 10 years of the wealth industry, especially on the consumer retail side, mutual funds have grown tremendously. We are sitting at 23,000 odd crores of fresh money every month coming into mutual fund industry through retail. On the broking side, we are adding 40 odd lakhs account on an average every month. So cumulatively, there are more than 20 crore unique folios across all Indian households. At a unique PAN level, we are still at less than 5 crore PAN on mutual fund side. On the broking side, we have more than 17 crore demat account now, but at a family level, at a unique PAN level, we are less than 10 crores. So still
The
there's so
opportunity.
much market to bring access to. But even with the early green shoots of what if possibly people who have savings and they can invest, if they get really, they really care about the financialization of their savings, because India was largely a gold, deposits, real estate kind of like culture, to investing in equities with the idea that there's a massive growth India is going to give, so I need to be part of that. That aspiration has kicked it at population scale, and we are helping to serve that market, making sure that everybody can invest intelligently. On the discount broking side, if you see the last 10 years, where largely the focus was great experiences at an affordable pricing, and that helped crack so many demat accounts. But the larger problem is to solve how you make these customers actually access to intelligent information. And that is a very technologically heavy problem. Not many discount brokers invested a lot on that. They focused on access and experiences. So we have took that approach since 2016 we're building this, and in 22 we launched, and there are 2 companies which I built and that got acquired by PhonePe, and that journey is continuing. So we're trying to elevate discount broking to bring intelligence also at scale apart from the discounted pricing.
All right. What's also pushing people to invest in mutual funds and equities is also the high taxation that the government is imposing on us. So, hopefully they want their money to do a little bit more. But, Vishal, you have the last word on this round.
So I'm the founder and CEO of WeRize. We are a growth stage fintech. Our thesis is to become the largest fintech platform for the middle India.
Right.
So we essentially say there's not one India, but there are 3 Indias. There's a UK, Brazil and Sub-Saharan Africa all live in India, right? So India is a continent-sized country, continent-sized population, right? So UK is the top 5%, probably most of your typical stock market users, right? Or the internet economy, the top 5%, which is like a UK within India, the English speakers, millennial Gen Z tax-paying population, and then we have the middle and the lower middle income customers, typically living in the small towns and cities of India, and then you have the Sub-Saharan Africa equivalent, which are the really poor people, mostly living in, most of them living in the rural and the tribal areas of the country. So for us, the focus is the middle India, not the top, not the bottom, right? So that very large segment. So the way the GDP is currently divided is the top 5% is 50% of India's GDP living in the larger, top 10 cities. And then you have around 20% population, 35-40% of India's GDP. In 5,000 cities, there are 750 districts and 5,000 small towns and cities. And then you have 70% population living in all over the rest of the India, just providing maybe 10% of GDP. So what has happened in India is the top 5% gets access to everything, right? There people with multiple cards and like everybody's out to vote them. And then the bottom is also, has a lot of choices because that's the vote bank, right? And there is priority sector, there are Jan-Dhan accounts, there are your different schemes, Ayushman Bharat scheme for insurance, if you are below poverty line, and you have these different microfinance, etc. also happening, or farm loans also happening. But there is this forgotten missing middle, which is not in the priority sector and not in the prime sector. So that's the focus for us. But the challenge is like, how do you reach them, right? So typically, if this is a segment which is, as I think Anuj was saying, India definitely does not have an unbanked population. So our customers, which are middle and lower middle income customers in smaller cities, they definitely have banking, but they bank with the PSUs and the local cooperative banks. The challenge is, how do you reach these customers and provide them products which your typical PSU will not. So PSU will provide them a bank, but nothing else. Like if you look at SBI, which is the largest bank to this segment of customers, they don't give them a credit card. So SBI has 50 crore credit bank customers, but only 1 crore credit card customers. That too, mostly people in the India one. So this segment of customers have a bank account, working in like blue to grey collar jobs. Like somebody is a teacher in a small school, right, or somebody is a sales guy working for a pharma distribution, or maybe a small SME. So these people need unsecured loans, SME loans, secured loans, investment product, insurance. So that's what we do. Yeah. But the challenge is, how do you reach them, and that too profitably, right? So digital definitely does not work. So yes, these people do have smartphones, right, but if they want a deep transaction, like if you want to, you ask, last point was how do you get money from their pockets, right? Like how do you make them customers and actually make money from them, right? So that segment, digitally you can, they do use digital, they use smartphone, but mostly for consumption, like, or,
they want a touch point.
They want
a physical touch point.
They need high touch, and that is something that is very important. So we studied the LIC model very closely. So LIC is one company that has done a stupendous job of reaching to that segment of customers and building a large business. But we adopted the same model. We in fact use the same network of trust that LIC has built. But what we did is, instead of having a branch model and a sales team which manages these LIC agents, so for example, LIC has 40 lakh agents, and they have 1.5 lakh employees to manage these 40 lakh agents, and there are thousands of branches, so that adds to the cost. The biggest innovation we did is, we have the same model. We have around 12,000 freelancers across 3,500 cities. Through them, we have acquired close to 17 lakh households over the last 3.5-4 years of our journey. But all of these freelancers are managed completely through our platform. So with this, we are able to have the physical touch, which is very important for our customers. But we don't have the cost of that physical touch. So we don't have branches, we don't have feet on street to manage these freelancers. So we currently have 17 lakh customers that we have acquired, 1,100 crores of outstanding AUM. We're doubling every year. And these freelancers are like our digital touch point. And it's been doing well for us. We have personal loans, SME, loan against property, affordable housing, insurance. These are the existing products.
Wonderful.
We want to eventually get into wealth and investments also. But that's been working well and is super cost effective. We turned profitable last year.
Many congratulations.
Yeah.
That's very important, I think,
Yeah.
for everyone. But thank you very much, Vishal, and I think some of these points, of course, we'll take up in the course of this conversation. Manish, I wanted to start with you. You said that there is an 800 billion credit finance gap, right, for SME lending.
Yeah.
For underserved businesses, of course, it is very imperative, but also, can you dive a little bit deeper into what KredX is actually doing to make this inclusion possible immediately, and also, what are your plans over the long term?
So see, what happens with most of the MSMEs and traditional banking is still stuck with your collateral based lending, right? Which is basically, give me something as collateral and then I will give it. I think most of the startups here is, all of you guys are using credit card, and all of you guys are most happily giving a FD for getting that credit card, right? So even for startups, well funded, you want a credit card, banks ask you to give a FD in lieu of that, right? So that is what basically, because banks doesn't want to go on and look into any untraditional model of it. So what we came up with saying this, let's do a cash flow based lending, which is fundamentally that there are, what we do through is basically we use invoice as saying that if I have raised an invoice, then basically there's no risk of execution is there, right? Because the work has been done, right? It's actually on the past, so you're betting on the past, right? So let's say I'm an SME, I'm supplying to another larger company. Then I have a sort of account receivables from that company, and in his books there is an account payable, right, which is sitting on the liability. Now if I a little bit stretch these things, let's say here there is a very small small enterprise is there, and the other side is, let's say, a Reliance is there. Now the small enterprise cost of fund would be possibly around 15, 16 or maybe 20%, right? Reliance cost of fund is around 5-6%, right? But when I do account receivables entry, the Reliance also did account payable entry into their books, right? Which is a liability on the books, right? Maybe a lower grade liability, but it's still a liability on the books of Reliance. Now, when I sell my account receivables, I might be selling it at 15%, but I also selling a liability which is held by Reliance at basically 15%, which makes it a very interesting asset class, right? Which makes it an asset class where anybody can come and say, hey, this is fundamentally Reliance liability. Why should not, right? Reliance paper is in the market for 5%, I can get it at 15%, and that too is maybe 90 days period, right? Maybe additional risk because there is a trade dispute, there is something else coming up, but that can be nullified over relationship, data, etc., all those things. And then that becomes, then if a SME then comes to you and say, hey, give me this money against my invoices, then you are saying I don't need a collateral, right? Why you need a collateral? And this is basically with everybody, right? All SMEs, all trade finance, all exporters, importers are sitting with these kind of invoices. Then why not use these invoices to, magnify it and give access to everybody in the market?
There would be a question like, what is the kind of default rate? Because that would have stopped traditional businesses from actually going down this route.
Very small, very, very small. See, traditionally you are doing a very small, sort of a tenure kind of a lending here, right? It is only 30 to 90 days.
Right.
So whatever needs to happen in this 30 to 90 days period. And you are talking about a risk and a counterparty risk. So you are talking about Reliance going bankrupt in 90 days, the SME going bankrupt in 90 days, the trade dispute getting happen in 90 days. All this happens when you have a last 3 years of history that nothing like this has happened. Right, so for everything there is a probability, right? The probability here is very less. Now, I'm not saying default will not happen, right? But the default rate is generally less than like 0.5, 0.2 kind of a person. Right? Typically in banking, what you do, if you join as a CEO of a bank in the first board meeting, somebody will tell you, hey, my NPAs are very large and I don't know what the hell is happening. But you say, okay, do one thing, reduce the tenor, reduce the ticket size, right? That's pretty much without knowing anything. This is pretty much that. So you're reducing the tenor, you're reducing the ticket size. You're not giving a 10 crore project finance to somebody. You're saying, hey, whatever you are selling, right? Whatever is your COGS, I am giving you like, 1/12 of your COGS at any given time.
Right.
So you are pretty much safeguarded a lot in terms of it. But what is also essential is because you are doing a small term loan, what you also need to see is your cost of underwriting, right? And that's where the tech comes into picture, because if it's the same microfinance problem, right? If you are incurring like 100 rupees and giving a 1,000 rupees loan, then there is a problem, right? So what you have to do is you have to reduce that through the cost of tech.
And the data for the cost of underwriting?
Yes, the cost of underwriting in terms of the data that is coming up, how you are managing the accounts, right? Because you need to look into the cash flow every time, right? You have to make sure that this cash flow.
But you have that kind of data set and access to that sort of thing.
Yes.
Okay.
And so once you have that, then your cost of underwriting reduces and then it becomes a profitable business.
Okay, all right. Raghu, you talked about how you founded Zolve, right? Basically to solve the problems of creditworthiness of immigrants or Indians going, especially students also, to the US. Cross-border financial services, especially if you look at it from an India sort of a perspective, it's a comparatively like a new domain. Can you discuss what's been your approach of balancing, say, financial inclusion but also profitability?
Oh, so that's a fairly straightforward thing, right? So what we do is we acquire customers while they're still in India, and underwrite them in the US. So all our cost is in Indian rupees. All revenues are in US dollars. Right. So the model is inherently unit level profitable. There is nothing much that we need to really push hard to really do that, and we give them credit card. And these are the guys that we're not even going after the now India 2 or the India 3 that Vishal was talking about, but still sticking to India 1. The kind of customers that Amex, HDFC, Axis, right, are pursuing them in India. But they can't underwrite these folks in the US. We take the cream of the society and underwrite them in the US because they are treated as second-class citizens because they don't have any history.
Right.
And give them a credit card. They need the credit card because they need to build a credit history. Based on their credit history, they get access to auto loans, mortgages, employment, finding an apartment for rent also.
At what rates?
No, it's the same rate because we know that these guys are low risk here, right? The location is if your credit worthiness is not a function of your location. Your credit worthiness is a function of your behavior. Just
so
because you move from
credit worthiness without borders.
Exactly. So that's exactly what we do. So we work on information arbitrage.
By the way, I've experienced what you have said because I used to live in US. Right? So when you move there, right, you have to
pay in dollars.
No. So you have to keep money in the bank just to be able to get a credit card against that, right? And then you eventually build history.
Walmart used to have a massively profitable, Walmart has a Walmart Financial Service, a massively profitable secured card. So they have, Walmart is always at the borders, like Mexico border. So all the immigrants coming up, the first thing they do is buy from Walmart. And the Walmart store, they used to give a $300 credit card against which they take a $250 annual maintenance fee. Right? $250, right? So fundamentally,
$50 Indians have
$250, you're giving $50, right? Fundamentally, massively profitable business of Walmart.
So that's the thing that we address. So we are profitable from day one only. So we acquire customers at $10. First month, the customers are spending $1,000 on the credit card. 2% is the interchange. We make $20 on the first month. We're not even looking at revolving. All right, first month only we do $20. So the 12th month retention is 88%. We are a 40-month-old company. 40-month retention is 76%.
76%.
And that 76% is not just because some 10-15% have come back to India.
Right. So they're
right,
not
76% on the base of
no,
80-85%.
It's great, right? You're solving a problem which exists,
Exactly.
and people are trusting you with it.
Yeah, and there is no option. Actually,
there is no
not that
option.
we have to solve for it. There is no other option in the market for the customers.
It's sad in a way, but good for you.
Yeah, it is. It is.
Vishal, you talked about catering to the middle India, right? Is there a trust deficit when you spoke about which needs to be bridged?
Yeah.
Okay, and when it comes to extending, or would you say that these people are already aware and just waiting to migrate from traditional banking into something that they feel is easier?
No, so okay. So the problem that we are trying to solve is first of availability of products. So in credit, it's always a supply problem.
Right.
It's not like that credit is there and they are wondering whether I should take it or not. So if you're giving somebody money, it's your job to find whether the other guys to.
So what I meant is that people are aware that that there are people like you that exist. And therefore, there is no fear for them to depart from traditional banking services.
No, so let me be clear. We are not opening bank accounts.
Right.
We are giving them credit. That's the main product, and then insurance and some of the other things. Right. So the trust part. So that we are solving two things. Thing number one is that the banks that they work with do not even offer these kind of products.
Exactly.
That's point number one. So that's why we are a full stack platform.
Right. Okay.
So we start from designing products that are meant for the small city India customers, because what is the price point, what is the amount, what are the typical use cases? For example, in our case, we have a product called family loans, where we underwrite the entire family, right, like jointly, right? So the use cases are typically somebody in the family is going through medical treatment and they need money, and right now, if they work with if their banking partner is some PSU, there's no way for them to get an unsecured loan. So typically what they do right now is either if they get a gold loan or they go for a money lender, which will obviously charge a lot, and in case of gold loan you have to first have that gold for you to be able to get that loan, and that too, there's this whole shame about 1 year gold and all, right? So point number one is you have to build products that are meant for this segment of customers. So we have products across personal loan, which is more like a family loan because we underwrite the family. Then we have SME, loan against property, and affordable housing. These are the products, and insurance. So these are the products that we made for these customers. Second is, the problem is when you want to work with them and you want to underwrite these customers, you need information. You need their bank statements, property papers, utility bills, family credit details. The challenge is a lot of these people, the only way they have been doing with financial services is through physical branch visits, a very offline manner. They have never opened a bank account which has an online interface. Even if they have one, they've never opened an online account. Second, sharing information they're very worried about, because every day Amitabh Bachchan will come on KBC and RBI कहता है don't share your Aadhaar, because these people have been the targets of all these cyber attacks. So what happens is, pure digital, even if somebody is giving them supply, they are worried what will happen. Right? So that's where our second problem we have solved is we tap on the existing network of trust, which is LIC agents and similar people, which are already trusted and are the neighbors or friends of these people. And through them we acquire the customers. We have this platform like freelancer. There is a freelancer app, there is a consumer app, like 8-9 different platforms that we have built. And each of these freelancer essentially gets their friends and families, right, and then sells them our financial products, and then helps with the fulfillment. And then finally, when the time comes to collection, we pay them, these freelancers, based on collection. Right. So there's this full loop, right? And because we don't have a feet on street and team to manage these freelancers, our cost of operations is super low.
Very low, right.
Right? So we don't do digital marketing at all. We have zero digital marketing. So typically 30 to 40% of VC dollars go into the pockets of Google and Facebook. So we save on ops cost, we save on digital marketing.
So your CAC is very low.
Our CAC and cost of operations is super
very
low.
Okay.
So that leads to us being like a sizably profitable firm.
I'd be interested to know, the underserved often are women in Middle India, right? So what are the key challenges that you faced in sort of providing financial services to them, and also what is the offtake from women for some of your, say for instance, MSME loans? I don't know. I'd like to know.
No, sorry.
So for instance, the loans the credit that you provide to start businesses, for instance, right? Small business loans.
Yeah, we do SBS.
Yes. So what's been the offtake, from women, or what's been the offtake generically from women for all your products?
Women are 30% of our borrowers.
All right.
And actually, the credit performance is better for women.
All right. Anyone else has an input on,
In fact, we actually tell our freelancers to get more women borrowers, because we have seen them to be more responsible with their credit behavior as compared to men.
No, it's a global fact, right? If you can use gender as one of the variable in your credit risk, you are always good, right? But like in US, you can't. Right? Even if I know that if I lend to a female, whether it's card or whether it's loan, it's going to be a higher repayment rate. But FCRA in US tells us you can't do it based on gender.
Right.
In India, there is no FCRA, so you can always build something on gender, and typically always women are
we actually do that.
There's an interesting use case. So I invested in quite a few companies. There was this company in Coimbatore that I was talking to who were underwriting women based on whether they have a 4-wheeler driving license. Right? If you have a 4-wheeler driving license, if you let the family lets a woman to have a 4-wheeler, drive a 4-wheeler and get a driving license, that means it's a progressive family. So imagine Coimbatore, right? It's a progressive family, so the default rate will be lower because they really they're looking at equality between the gender within the family, and 4-wheeler means they can afford something. So they started underwriting. Right, phenomenal. So that guy pitched the story, and I was like, oh, this is phenomenal. We need to get more customers, and we were discussing. Right, it became so popular. Right, the company tanked within 3 months. Because once people figured out that they're giving loans to women having 4-wheelers, the RTO guy started getting women in the families and started giving licenses to them. Right, it became a nexus because the company completely tanked.
That's one of the problems. Right? Specifically, we have seen in MSMEs they know that if women, we will be more positive towards it. So they have their wife who has nothing to do with become a director in the company, and then apply. And then when you call the women and say, "Ma'am, you have applied," and she said, "No, I have no idea. Please talk to my husband."
Wow.
And then we're like, okay. And we have checks, right? Checks bounce cases against women and women has no idea that there is a check which has been bounced, and they are the signing. They don't know because the husband or some family member has asked them to sign.
I think the lesson, sorry, just to add, is that the credit underwriting cannot be like this one or two variables, right? So
it has to be deeper.
It has to be deeper. Just women comes, you give loans, right? It's like you have our ML models have thousands of variables where we take the banking and CIBIL and the family data and so many other, right? It's just that our models ourselves have proven that if the borrower who's actually running the show, and it comes in when we do like a video tape, PD, where we talk to the borrower and we understand what because in 5 minutes you get to understand whether this woman is actually running the show or she's just a proxy. Right?
Understood.
So it has to be deeper than that. Otherwise, you'll end up losing money very quickly.
Somehow I'm taking it as an affront, that they're using women and taking these kind of loans, and then, but anyway, Kaushal, to you, your company caters mostly to first-time investors, would you say, to with little exposure to the industry. Talk to me about the challenges that you faced in sort of keeping this innovation afloat, and at the same time continuing to build trust within your customer base.
Right. So one thing that good happened with us, we started with gold.
Right.
So that already have some trust in even the smaller towns or the middle India, what we were talking about, even the middle India mostly. So they know gold, how risky it could be. The equity and mutual fund is something like they see a little riskier part as a riskier asset than gold. So that worked really well for us. And challenges like is technology. Although people are using WhatsApp and all these tools, but when it comes to, let's say, setting up auto pay or making the UPI payment in the smaller towns, that is not that comfortable for them to do.
So that you have to continue to build trust for them to be able to do this on a continuous
basis. So for trust, like one thing what worked for us is like going into local languages and trying to find, like, let's say, who they trust and testimonials in local languages. So these things work. We have like full social media thing in almost 8 languages. So that helped us a lot to build trust.
All right. So basically, people like themselves telling them about a product that exists. Anuj, how does Freo build trust among these first-time digital banking users that you have? Are most of them digital natives as far as your products are concerned? And also in terms of, shine the light, because everyone's talked about various aspects, but what about data and privacy?
Yeah, I think, there are multiple ways to skin the cat, if you will. And I think there's no taking away from what Vishal said, whether neither high touch, what Kaushal said in terms of languages. I think we do both in some form or the other to try and whether you have physical or not. We don't have physical at least, but we try and solve for it through some digital touch at least to get some trust going in their languages and all of those things.
Right.
But I think I'll give you an incident that happened when we started the company many years ago. We were piloting and we went to many companies to say, just to show our product out. When we went to these Infosys and large companies, they were a little skeptical. Then we went to one BMTC kind of a factory, I think, if I'm not mistaken. And there we said, we'll give you credit, for example. And we said, we'll give you like 50,000 rupees or I don't know exactly. But we'll need a bank statement and those kind of things. So our person who was there with us, the customer started giving them their bank account, the login ID and password.
Oh, wow.
कि आप ले लीजिए, आप मुझे हमें loan दे दीजिए.
The desperation is.
Yeah, so we said, and this is Bangalore, this is not some tier 2 town or anything like that. And we said, please hang on, we cannot take this, don't give this to us. And anyways, we didn't have a product, so we were more like, we were showing them screen on a piece of paper. So I think the trust angles in financial services, I think when you're putting your money in, the trust level has to be far more. So when you take, say, an FD deposit or you take any kind of investments, you will bring in all the kinds of trust to ensure that you deliver the customer, show the customer where the money is going. If you have it insured by RBI up to 5 lakh rupees, you have to keep ensuring that happens. And over the years, I think we've built a certain brand out there where people sort of now trust us. So for example, we get about 50-60% of the customers come to us organically now.
Wow.
So we used to spend, like Vishal said, the digital marketing dollar money that used to go to Facebook and Google. But I think post-pandemic, it's come to zero for us now. Because we realized that we got the customer base and now we're using them to say that now the next set of customers that are coming are all organically to us through word of mouth.
Word of mouth.
For that matter. Or, and through the product, because where we were probably just offering one solution, say about 4 or 5 years ago,
you have many.
Now 3 or 4 things. So, and I think one part where we started building trust is that start small. So we believe that the middle India segment, which is maybe the income says 30,000, 40,000 rupees, whether you want to UPIs, which sorts, we're not going to come and become the largest UPI players now because we just got a license. But we will tell them that if you start small, I will look at your transaction, maybe give you like a 10,000 rupee credit tomorrow, for example. So I'm getting very good behavior on that segment.
And data.
So the customer, it's not like going into gambling or anything like that. I mean, I'm sure if it is unsecured, you can't control it. Yeah. But we get a very good repayment behavior because people realize that if I don't do this, I will not get it back and it's my need. So unlike the popular narrative where a lot of them, where people are saying that a lot of the unsecured credit is probably going into fueling the stock market and other asset classes, which is a thing, the middle income segment is actually using it for genuine consumption rather than anything else. It's not necessarily going, I'm sure some portion must be going into, the stock or maybe buying some riskier assets or gaming. I'm not taking that away from it. But the large part, but that's the segment where people like us, where we have enough money, but we want to probably get a margin call and make some more money and invest all these IPOs that are coming out.
Right.
So I am taking a credit product more because I have to invest the money, not that I need it. But my customer segment needs the money for what they need for using it on a day-to-day basis. And that's why getting them started small. So you don't want to take money, no problem. Maybe you can take insurance with us. Maybe you can invest a little bit money in a mutual fund of 500 rupees. So I think starting small, starting quickly is where we build the trust with our customers over a period of time. And that's not happening immediately. We started like 7 years ago. It was a very different product and it was only one product that time. The brand got built out. But I think that's how we have built the trust. Now it's start small, get started quickly. The laws are very clear, without KYC or anything like that, you can't do it.
Correct.
So once you follow that.
How has customer behavior evolved? You've had a 7-year journey.
Yeah.
Any interesting insights there?
Yeah, I think, we thought that when we started off with, let's say only with credit, for example, right? We were acquiring a certain set of customers and we were doing high ticket credit only. Over the years, we realized that good quality customers, people who probably don't, when I say good quality, I mean that I am also a mistake here that we end up saying that people who don't need credit or people who have high income are good quality. That's not true. So it's a little, you use that term loosely. The guy who earns 30,000-40,000 rupees as well is a good quality customer because the ability to pay and intent to pay does not matter what your income is. You just don't need, if you're a 30,000 customer, you don't need to get 3 lakh rupees of credit. You will probably just need 30,000 rupees of credit, for example. Right? So I think our customer behavior has evolved to say that we should not treat people with probably lower incomes as they may not be good quality. They may not be high value. I mean, you can make, if you give somebody 5 lakh rupees, you'll make more money.
Don't confuse quality and
yeah, so I think over the years we realized that there is an entire spectrum from 500 rupees all the way to 5 lakhs from a credit perspective. We also realized that not everybody needs the credit. So hence we came up with saying that if you look at the financial life cycle of a customer, all of us here, we had a bank account, then we did payment, then we got credit, then we got insurance, then we got a family, then we had a surplus money, we did wealth. That's the journey all of us go through. Everybody has to start somewhere in these 5 places and then expand. So we started with one and then expanded left and right. But we realized that people will come to us for various different reasons at various times of their life. So not everybody needs a credit right now, a credit card right now. Not everybody needs an insurance product. Not everybody is ready to invest money right now. So I think if I'm able to give them something that they need today, I'll be able to hold them on, and then tomorrow I have the option to say that you can take this or not. I think that's how we believe that the consumer has evolved. But a big learning aha is that I think don't confuse income slash the ticket size and or the revenue generated from them from a quality customer. We have seen that completely orthogonal to what the behavior is. Not to say that there's enough evidence, and Anuj will tell us from a financial sector, there's enough evidence that how it stacks up depending on low income, high income, new to credit or old to credit. But I think that is the opportunity that all of us together have to work towards to unlock.
Anuj, why don't you tell us?
Yeah, so I think maybe first answering your question on the change in customer behavior, I think because we work with a lot of different partners and keep talking to them, I think there's definitely a fundamental shift that has happened, at least in the younger groups, where they are more open to taking credit.
When you say younger group, can you quantify what ages?
I'm talking about anyone who is less than 30 years old.
Right.
Like if you look at the data maybe 5 years ago versus now, the number of customers in that age group that actually have a personal loan or a consumer durable credit, while the credit expansion itself has kind of happened, the amount of loans or comfort with taking a loan or maybe investing or using it for consumption, that comfort has gone up. So from being like a very, very saving oriented economy to a consumption and even comfortable with the debt economy, that has quite a bit happened in the last 5 years despite COVID that we have kind of seen. I think to the other aspect which Anuj was saying, definitely I think banks have very preconceived notions about what is a good customer. And banks are literally the guardians for public deposit money. So they don't have the ability to take any risk. Right, and that is where NBFCs like us or the fintechs that are here actually come into the picture to say, okay, can we try something out which is conceptually considered as a high risk, but is really not high risk. right? And so I think as the fintech platforms have kind of evolved, a lot of new people are being offered credit, and they've realized that it is okay to pay 2%, 3% kind of interest rate, and then actually meet your needs, because that's actually something that is helping them live better.
Right.
So that's the two changes that we kind of see across a bunch of our partners.
All right. Okay. Ujjwal, how do you garner attention from young, first-time customers to build trust?
So there are a couple of things. One of the biggest change that has happened in the last 10 years is the fact that India is largely moving from a savers to an investors.
As Anuj pointed out, yeah.
Like culturally, we were very savings heavy, and then credit is a very especially the younger population, because they really have the desire for consumption, so that's leaving that credit growth part aside. But generally on the investing side, like it was always like you, as you said, right? You pay, spend, manage, grow. Like the grow used to come after like 35s or the 40s, right? But now the best part is the grow is coming early, because once your desires start increasing, right, you need to have a larger corpus, right?
True.
So people
iPad
realize that the only way to compound is markets, right?
Correct.
Like while people say it's a riskier asset class, but if you take a 2-3 year view, markets are like no-brainers, right?
Did this happen during, that 2020-21 period? Is that?
Yeah. See, what happened is that.
Or was it before? I don't know.
So, see, for like 35, 40 plus, the grow part to grow their wealth comes as part of a like normal human
Right.
being like
Life cycle.
Right? But what happened post-COVID is the fact that people realized that, and I will be giving you a very philosophical answer. People realize that my human capital is also at risk. And what I mean by human capital is the fact that my job, my ability to actually something which I control as a life, right? Could be changed fundamentally next day, right?
So true.
Right? And then people realize that I need to make sure that whatever money I am accumulating because of my talent and human capital, I need to put into practice, right? Money needs to work for me.
Yes.
And that culturally changed, right? And that is one of the biggest, I would say, the tipping point for the younger population to get into markets and start investing early. And that, I think, that change has gone mainstream. Because see, at an overall country level, financialization of savings is very, very mainstream now. That's why a lot of banks are talking that we are not getting deposits. Everything is going to mutual funds and markets, right? So that's very true, right? 23,000 odd crores monthly SIP, just mutual fund money. I'm not talking about money coming directly into markets through broking platforms. It's a huge amount of money, right? It's not a small amount of money, right?
Ujjwal, can you tell us from your customer base, what percentage would be, the young under 30s for equities, MFs?
See, actually, we have a very unique situation as a business, right? Because we are, as a group, right, our reach is like population scale, right?
Right.
So what we see is that across our platforms, the gradual mix tends to be on all sides of like you have very young people and you have people above 40s also, right? Across the board. But the interesting part we are seeing is that the new accounts that we are getting, like people who don't have KYC till now at a capital market level, right? They don't have KYC across the country anywhere with any other financial. That segment is very young and they are starting early.
So what is young again?
So young is anybody I think average around 22, 23.
20 to 23. That young? Huh?
Yeah, that young.
Superb, yeah. When I was 20 to 23, I am.
Some of them are starting very smartly with ETFs and all, very, very intelligently.
Yeah, I was shocked. I had an intern. I had a colleague who's investing in crypto, and I'm scared of crypto. I was like, "What are you doing? You should not. This is, we don't know what's going to happen and all that." But no, I mean that ability to take risks.
The population actually,
and she quit. Yeah, she quit in 2 years. Probably made a lot of money.
Aspirational quotient of country, right, on the younger population is very high now. The aspirational quotient, and whenever
India is changing,
right, you tend to make sure that you really invest in assets with growth, right, eventually, versus let's say a fixed deposit or keeping money in just savings account, right? It is actually, we think it's a blasphemy to keep money in your savings account. So
yeah.
Also, accessibility has also increased a lot, through technology, mobile phone. Earlier, if I want to invest in equity, also, how will I do?
So that's actually happened. So 2016 onwards, right? I'll tell you some statistics. 60 mutual fund SIP setup, even if you don't have a demat account, because this is a physical statement of folios you can create, right? That was always there. So that ensured that 16 to 19 onwards, SIP per month used to grew at a compounded annual growth rate of 47%, and we are right now at a base of 23,000 odd crores of SIPs a month, growing at 20% CAGR. broking industry is 16 onward because of the opening of SEBI allowed complete online digital journeys for opening account, including power of attorney for transfer of security through DMAT. That they allowed, and thanks to discount broking as a era itself, it brought a lot of access to markets just simply by going online and installing an app and opening an account within like 3 to 4 minutes, right? And that provided a lot of impetus in terms of expansion of markets. And that is why 2019 onwards, broking accounts started increasing at a Kacker of almost 33-34%. Right now, still growing like that.
How many of these are actually active? Like I always wonder about the fact that we have so many Jan Dhan accounts, we have so many mutual fund, we have so many Demat accounts, but how many are actually active?
That's the challenge part which need to be solved. See, because when a certain category, like people never used to invest, right now they're starting investing. So if you just make sure you provide access, right, you are growing as a business, right? So that's why most of the brokers focused on expanding the markets. They never care that what you're doing with your Demat account, right? I think that is one of the areas for next 10 years. So the innovation was on access and pricing. Now innovation is on how you bring intelligence, real value, where people can actually invest and build a sustainable wealth portfolio when they open a broking account. So if you look at mutual fund statistics also, mutual fund does that well because there's a fund manager at the back, right? So 4.5, like less than 5 crore PANs, but total folio is 20 crores. In broking, the numbers are inverted. 17 crore Demat account, number of customers active during a rolling 365 days is only less than 4 crores. And that's an opportunity we are focusing on. So for example, on broking between mutual funds and PMS, which is a rich people product, there is no product on broking for people to invest and create a direct stock or ETF portfolio smartly. There we have got something called wealth baskets. These are model portfolios available to retail investors, which could never be imagined, but we invested a lot on technology and research to make that accessible at scale. Now you can build a meaningful portfolio even on broking through wealth baskets.
It's fascinating because there's so much that was not imaginable, right, which has been done by people in this room. I mean, absolutely fascinating. Good for India. Wonderful. But you talked about how technology is going to be a driver now and focus, right? Anuj, I wanted to ask you, see, tech-led innovation and AI now, that's like inescapable. But how do you ensure that, your integration, your associated risk is mitigated even while you ensure, good product offering?
So like I think 2-3 things here. Technology is developing at such a rapid pace that it is very difficult for people to actually realize what risks actually come with any technology that you're adopting, right? And the second thing that is becoming...
No, I don't understand that.
So let's take an example of an AI model, right?
Yeah.
I grew up mostly working in Capital One for about 12 years.
Yes.
Capital One is one of the earliest kind of fintech OGs in a way that democratized data and kind of lent at scale, right? If you think about what type of models were built even like 7-8 years ago, they were very, very stable. They were very, very kind of say statistically oriented and very, very clear and well managed, right? But what has happened over time is that data availability has become very, very easy. Secondly, the ability to build a model is literally writing 5 lines of Python code, right? Which means that a lot of people for whom the knowledge really kind of enabled them to build the right things. It has now opened up to a wide spectrum that doesn't know how to actually contain the risk while building that technology. Okay, and then if you think about LLM models now, which are even from a Jain AI perspective even further, nobody understands what the models are actually doing, but they can actually see what it is doing for a limited sample set. And it is literally one day's job for you to create an app using an LLM if you want to. So what I mean is that you can build something very, very quickly, but for you to really understand the pitfalls of what you are building can probably take years, if not months, to understand it. And in that era, I think like a lot of it is on the like people in this room as well as like the individual teams to be very, very thoughtful about thinking about risk proactively, right? If you're putting a new model in, monitor it closely, monitor for early signals, make sure that you go back and they don't bet on it too high in the first go itself. That's the way, so it's not that technology is bad or that we should not use it, but as soon as you take it with a bit of caution and you are aware that you might miss something, you're not very, very positive about how it is going to play out, that cautionary mind and being open to what is actually happening can really help you control the risks massively. Yes.
I have a question on the data set that is, data that is available. How would you judge the quality of the data that on which these models are being sort of built?
So I think a little bit of the data is related to the quality of engineering, right? Maybe I'll just compare US versus India because I've worked in both places. So US used to have really good credit bureau data, and then I decided to kind of come back to India and I did a little bit of research. Till 2015, 2016, Indian bureau data was not that good.
Very thin, yeah.
Very thin, very few people, and even the technology systems behind them were not really great. But if you look at the data that bureaus are providing today in India, while I've lost track of what happens in US now, but it is much richer compared to more robust, more cleaner. The Aadhaar, the PAN, all these fundamental things have really made sure that you are actually underwriting the customer, that you are looking at the history for rather than somebody else. And then if you look at all the other data, whether it be payments data, which is now being sold because there's a bunch of money that went into payment aggregators, or even bill pay data, which is now starting to come up, or telco data as telcos, because of competition, try to monetize their data. The quality of the data is exceptionally good. In fact, I feel like we have less talent in India to really build the right type of models
for the data that we have.
For the data that we have.
Very
or is it
opportunity?
Yes.
All right. Okay. I want to now talk about regulation. We've spoken of the risks, right? So the economic.
Before we get into the regulation, I think we are probably missing out on one large chunk. The way I would really look at it is there are two buckets of companies which are trying to do the financial inclusion in the country. One is companies such as fintechs, where we go after the data that exists and start underwriting on them. Second thing, there are these companies which are sitting on data who wants to now underwrite. Let's say probably like Urban Lab.
Yes.
It has so much of data about all the suppliers that they have and the customers that they have. Maybe Swiggy, the restaurants and the delivery boys, or all the logistics companies, or I closely work with a company called Ninja.Cart, which is into agri. They have so much of data amongst all the traders in the mandis and the farmers, right? And these traders and farmers are extremely aspirational, ambitious. They are not able to grow because they don't have access to capital, because you need to pay and buy the produce. The farmers are not going to give it on credit because farmers need money because they have taken credit somewhere else and stuff like that, right? But this Ninja.Cart is now a 12-year-old company. They have 12 years of data on a trader and a farmer.
But
so now they want to really figure out, so they know that these traders are good traders, these are bad traders, and these good traders are ambitious and aspirational to become much larger than what they are. They need access to capital and they have so much of data. Now Ninja.Cart wants to take an NBFC license and start underwriting these people. And the way they're looking at it is, they're classifying the customers into two different categories. And that's where it gets very interesting. The people who are, let's say, 40, 50 year plus, and the people who are in the 20s and the 30s, right? So why are they looking at it is the people who are 20s to 30s, it's easy for them to get financially literate through vernacular, through digital media and stuff like that, because they're savvy. The people who are 40 to 50
aspirational.
40 to 50 year old, you can't train them, make them financially literate through digital media. But the thing is that 40, 50 year old have so much of data because they're doing the same job for the last 30, 40 years.
True.
Right, you have data on one side and financial literacy on the other side, and then they're doing it, right? And that is an amazing space because they have so much of data and nobody else has that data, right? It's a great phenomenal opportunity. I think the next few years things are going to change significantly in the agri space and any other space that any of these companies go to. But that comes the real challenge, right? To the data question that you asked, no? Ninja.Cart wants to build an agri bureau because they don't want to part with the data that they have. Now every of these companies want to work in silos. Right, we don't have an Equifax, Experian, or a
that is where we were getting to.
Right, Experian, TransUnion, and just.
I will maybe add to what Raghu said and take a little bit from what Anuj was also talking about, the data accessibility. We don't have the right talent to access. It's unfortunate that Ninja.Cart and likes of these companies are thinking that they will have to do it, get their own NBFC license. They're going away from what they're good at to doing something which probably they're not good at, and they'll take about 5-7 years. And as we know, and as the NBFC, the cycles up and down, it's a whole new ballgame to do it. And they're moving away from what they're good at the core and doing something else. And the reason for that is a little bit of a chicken and egg. The challenge is, how do you stack up the pricing, right? The banks have a certain cost of capital advantage, and then the NBFC, then the fintechs. If I have to charge a certain right to the customer to make the risk-adjusted pricing make sense, okay? It does not matter whether you charge 15% or 25% or 35%. The risk-adjusted pricing has to make sense. Now, the minute you start going on the higher side, it's not okay, because then there's no problem with competition there, because that customer is probably not getting in the market also at 15%. So we may be getting, because I'm an HDFC customer, HDFC will give it 11 seconds, maybe they'll give it 11%. But that's me. That's not the market rate somebody has to go. So the pricing gets adjusted, the customer don't have a problem paying because they don't get access to credit. The chicken and egg is here is because if I have to charge a certain level to the customer, now I am already on thin margins because my cost of capital is higher. So if because of that I cannot afford too much of a risk.
Right.
If that is true, a lot of these models takes years to build. Anybody has patience to do it? So suddenly now I have to say that I have 12 years of data of all the agriculture, but I can guarantee you that they take another 10 years to figure out what to do with it, because nobody else will partner with them. Where are they going to get the capital from? So I think it's a little bit of a chicken and egg here, and I think the bureau data has become far better. I can vouch for that as well. But within the bureau, nobody wants to go around the table and ask how many of us want to do new to credit. Nobody wants to take more than 10%, 20%. Why? Why does nobody want to take new to credit? Because generally they may have a little bit of an education problem, how to pay back, they don't understand it, etc., etc., etc. Maybe so. The bureau only has about 300 million people on their rolls. On their rolls, and out of that, half of them only think in the balance of maybe thin. What about the others? So I think the way if you want to, if credit on UPI, for example, was a way I think that's been designed to be able to take that to the masses, because you give 500 rupees to the customer, but there also you have to underwrite, you have to collect. How are you going to do all of that at the masses? That's not going to be easy.
No.
So I think while the data exists, I think the engineering will probably catch up to Anuj's point. I think that's not a problem. We have enough engineering talent, but I think that nobody wants to take that risk to say that it's a 10-year kind of a thing that I'll have to learn. No, I won't do it in 2 years so that I can make sense, but I will end up having to charge more or charge less depending on what my cost of capital is. And that, I think, maybe from a segue into regulatory, I think what's happening today is that if you keep pushing the risk-adjusted pricing to a level where it becomes unsustainable, you will go to the higher segments. The minute you go to the higher segments, you will alienate the mid segments. Those guys will go to the money lenders who are in the unorganized sector. If they go to the unorganized sector, then you have no control over either the practice or the APR they charge 100-200% for that matter. And that the good thing was over the last 5-7 years, they all came into the formal financial ecosystem thanks to the fintechs. Right? So at least if I'm taking even 25,000 rupees from a fintech, at least I'm doing it in a way that my record is getting built, my bureau is getting built, the way Rahul's talking in the US. I'm a new guy. So I think we should do far more to bring those guys into the formal financial ecosystem, not push them away out of the formal financial ecosystem. And there's tons of things that need to be done, whether it's data, whether it's pricing, whether it's cost of capital, it's the advantage. Is somebody bringing distribution, then you have to give them the advantage, somebody bringing cost of capital to give them the advantage. So everybody has to play their own part, and that's where I think all the three people,
the synergies,
NBFCs, fintechs have to collaborate. I can't do it on my own. I don't think NBFCs can do it on their own. I don't think banks can do it on their own.
But what is it, Raghu, that's keeping them from collaborating? What is the idea?
We do collaborate by that.
No.
Don't get me wrong.
We were talking about Ninja Card.
Owning the customer, to be very frank. Everybody wants to own the customer.
Right? The
Nobody wants to
traffic
give what
data
Hey,
in
mera
bank-
customer.
No, traffic data in banks can be way better.
Which they are getting their funds.
Absolutely.
So
Banks go to banks. Banks
that's-
wants once
that's the
you
mode.
give them a customer, they wants to hoard that customer. This is my customer. I keep on telling the banks, why can't you provide what is you good for, right? Your strength is fundamentally your balance sheet. You give deposits and now leave the customer experience to fintechs or somebody else. No, I want to own the customer. There's nothing called owning some part of the wallet share. It's about owning the customer. Once I own the customer, I have the 100% wallet share of the customer. And that is something which is killing us fundamentally.
Account aggregator is actually decentralizing that data movement, right?
Yeah.
Providers and the users. Right?
Correct.
But not everything will get.
No,
Yeah, not everything, like this
All the
Ninja card
data
data is not
data.
there,
But
clap
I
data
think-
is not there.
I mean, if I could be like 10 years ahead in terms of thinking, maybe today it's more like regulated entities being the contributor, but if you want to create a rails of data movements and create a business model, maybe AI will open up.
I think everybody has read 3 statement very carefully. Data is the new oil. I want to own the customer. And third, if you live long enough, you will become a fintech company.
So the other thing is the UPI rails actually did that by design, right? UPI rails created that unserved segment, having a QR, was in cash economy,
Yeah.
suddenly got this footprint trails through phone pays of the world, and now they are able to get to.
So they also have a challenge. We are still a cash economy.
Yeah.
The amount of cash on delivery on Flipkart is still high. The amount of cash payments on Uber, Ola, Namayatra are still high. Right, so the country is still a cash economy. So we look at UPI, right? As long as you are cash economy, right, there's no data.
But I think there's a journey. I mean,
I don't know. So essentially, I don't know because UPI was the first in the world.
Yeah.
Then Brazil started Pix. Now US is doing PayPal now. Pix is way right. So it caters to some 60-70% of the GDP of the country. Pix, right? We are nowhere close to that on the UPI. Right, we are still happy with hundreds of billions of dollars when the country is at close to $3.5 trillion.
No, you actually check the UPI statistics. In terms of transaction processing value, we are world's biggest digital.
No, Pix in terms of the individuals that they use, right? Pix is much larger. FedNow is completely anchoring it on Pix. The US FedNow. Initially, they were asking the UPI to come to the US.
I would suggest you check the PhonePe Pulse report once.
So because we work with FedNow, so they are completely basing it on Pix.
No, I'm saying you double click on the Indian UPI data through PhonePe Pulse.
I think what he's saying is that the scale of the country, a bigger part of the GDP happens through PIX as compared to UPI.
UPI to
yeah.
India.
As a share of
Share
of the
overall,
total.
if the economy is 100, then 70
But
is happening.
you are
in
talking
Japan.
about two different economies, right?
No,
Which is
they
developing
came
economy
late.
going into that path to developed economy. I think there it's a gradual journey. You can't simply just start comparing US to India. I mean,
No, I'm comparing Brazil to India, not US to India. Both of them are developing economies only.
His point
So
is
they-
like there is a lot of data that is not getting captured because it's in cash.
cash.
Yeah, it's cash.
So then that
As
is
compared to we are
that's
all
where the
talking about
financial
UPI,
inclusion also
but
becomes a
UPI is
challenge.
just giving you a small slice of the world because still majority of India is dealing in cash and that data is not coming in. So there is
I would tend to probably agree with Ujjwal here that I think the data is there. I think what UPI has done, the data is at least 10 times more than what it was say 5 years ago. Let's put it that way.
We have gone significantly, but
It's a
not
journey.
there.
But the only thing that like I said, I think the data
The rate
is there.
of-
But who is being able to access it? Like Manish said, if I am not able to democratize that data to across the board, if A is only going to do it, and A is doing it in a very
No, A is
smart
not
way.
regulated. I'm talking very forward. See, that's.
But then if Ninja Card as a company does not want to give the data out because the bank says to Manish's point that I want to own the customer, then why will they do it? And then that's going away from their core.
Forget
That is my
financial
argument.
data.
That even
Even
has been
the-
a challenge with banks on the A.
The Olas, Ubers, and the delivery boys don't send traffic data.
You'll be just the
Right, so
You
forget
pull the
that.
same
It's not nothing that they can do with the
credit
traffic
bureau
data.
and banks will again pull the same credit bureau data.
That's
Right?
right.
Banks don't even trust that you are pulling the same bureau data or not. Right? That's the level of trust we have in, by the way, fintech. Trust, you said. This is the level of trust.
But the best part about the trust, I think, especially with the physical world and the digital world, is the fact that in the digital world, actually, fintechs create a far more like accountability in terms of because digital footprints are there. Like in an offline world, a bank, RMI or anybody could missell you anything, right? Because there is no digital footprint or there is any recorded footprint. In digital world, actually, there is by design, and I think that is somewhere we see the compounding of trust on platforms like ours, where the trust is fundamentally ingrained in the platform, right? Because anything wrong you do, people just start crying on the social world, right? Socially, we are very aware.
But I just have one point. How much of this do you think is a journey? It's just a matter of time.
just a minute.
Just a
It's a
matter of
matter of
time.
time.
Just a
No,
matter.
they also have a challenge.
Okay.
Right. We take one step forward and take two
Two
steps
steps
back, primarily because of fraud.
Yeah.
Yes.
Fraud
That is where the real challenge is. You can go, journey can be faster because you can run on the path. But the thing is, the moment the fraud happens, then you come back and relook at everything from step one. Right.
Any part of journey.
It's part of the journey, but
Part of
yeah,
the
that's where the real thing is. The Jamtara doesn't help. Right, so the thing that you talked about, right, people give login accounts and stuff like that. One fraud customers go. So the entire thing is built on the premise of trust. moment the fraud happens, the trust you lose
Gone.
trust on both sides. The customer
It's
loses
not building
customers.
trust, retaining trust.
Exactly.
It's more important than building
Exactly.
trust.
Yeah.
Right?
And trust
That's
is a
it.
big, the fraud is a big problem, especially in wealth, because there's a greed you're selling, right?
Exactly.
And we get
For
that.
everywhere. Somebody was selling personal loan. We are not into personal loan in Kerala under KredX name. And people were coming to us saying that I have given and they were people who were so desperate who was giving 40-50% of their loan amount as processing fee.
Wow.
And I reached out to a lot of people asking that boss how to solve this issue, and I realized there is a name against everybody. So there is a PhonePe who might be giving something totally unrelated to PhonePe in finance. Taking personal, giving personal loan. There may be a WeRize somewhere in some part of India. There is maybe a Freo somewhere in some
There
part
are
of
many.
India.
We've actually complained to cyber crimes.
Yeah,
I get Anurag Jain from KredX mail every day in my phone.
There's a
actual CRM.
there's a hundreds of such companies are going on.
No, but
Which,
that's
the
the
problem
problem,
with
that's the
digital is that
Sometimes
physical
you get
takes
right.
time, right?
Yes.
Digital doesn't take time.
No.
And that's where this Chinese loan app, all those things keeps on coming up. It's eroding the trust. I have like huge issue. Like morally, I have an issue that why people are selling a personal loan and defrauding literally people who wants the money. There are people who are calling us and telling us that hey, I wanted the money for like medical something and something, and they are even
So the
defrauding
most
those
common
people.
fraud we go through is KYC fraud, and the fact is that impersonation.
Impersonation,
And
yeah.
From capital markets point of view, I can give some perspective because there's so many credit discussion there. So SEBI, for that matter, has put that obligation on brokers to actually have a real-time active function to focus on this part of it. Then we have the obligation to deal legally, solve the problem, etc. So there's a lot of onus have been put on the brokers, and we continuously have so much of data to report to SEBI in that context of the exchanges through which it goes. So, I mean, it is a very serious function from a capital market, because a lot of these people are so gullible because they put up their savings in the wrong places.
Right.
It's just innocent thing.
But Ujjwal, see, for the capital markets, we have the SEBI, right? For the banking system, you've got RBI and you've got entities and stuff like that, and that's where regulation, I think, has been so much of a debate point, right? It's been a flashpoint for those who are innovating and for those who want to maintain guardrails and to ensure that things like these don't happen. That it happens despite is something that needs to be fixed, of course. But the economic influence of all of you in this room is rising, and that means that regulators, of course, are sharpening their scrutiny within the broader financial system. Now, in the latest, between how to manage fintechs, how to regulate, the RBI has now come up with self-regulation. How is that working out?
See, I think the biggest problem with regulation and innovation is how do you regulate something which you don't know?
Yeah.
Right? I remember some time back there was a discussion going on that RBI will regulate fintech, and my answer to that is please define fintech. You can't even define fintech. What is fintech? Right? Can I say Finacle, Infosys has made it's a fintech because fundamentally all the core banking are on fintech, right? So is it a fintech? I don't know. What is a fintech? Right? The only place I can come to where more near to it, anybody who is touching the money. Right? If you touch somebody's money, you're a fintech. Right? That could be the more nearer definition of fintech. But how can you regulate something which is not
you
there?
can't define,
or you can't define even, right? So that is the biggest problem that is there. That's why I think maybe RBI has all this self-regulation or even that fintech repository where you upload the data. This is try to be going ahead of the curve and try to find it out what all innovations are happening, because until unless you become big enough, you're not coming into the eyes of the regulator.
Right.
But a lot of people are working below the scene. They don't know or they don't report a different data like P2P. If you see what happened, right?
Yeah.
A lot of things was below the data, below the radar, and become so big that RBI thought that they've regulated it and it's going good. But once they start digging it, they found out there is a lot of shit which is there, right? So the problem is how do you find it out? Even in self-regulations, and I don't know if self-regulation can solve a Chinese app problem, because why do Chinese will come and get self-regulated?
It's a very good point.
No, I'm pretty much deeply involved in this entire SRO piece. I'm part of an industry body that's applied for being an SRO, and through that body we've been doing some work. KredX is obviously a part of it. some form. So I think their objective is very clear. There are like maybe about 10,000 companies out there that's touching people's money in some shape or form who don't have a licensed entity, right? So when we have an NBFC, so we are licensed. We work with folks like KredX or somebody else, a bank, and through them we get semi-regulated in some ways because whatever RBI will ask them, they will pass it down to us. And, so we get some semi-regulated, but there are tons of them who don't even have that. Right? And the large people would be maybe also, they could be middle layers, data providers, etc. So they were the ones that were also coming up with very innovative solutions, which were probably the grey, and that's what was causing all the problems. So for them to be able to ensure that you are able to get all of them under some guidelines, because they can provide the rules, but how? The rules were there before also.
Right.
But there was no enforcement. So now these SRO organizations actually will have some teeth in terms of whether it's to be audit, whether it is to make even say that these are the rules that you have to follow. Unless, for example, in the body that I'm part of, at least I'm part of a couple of them, but one specific one, like for example, if you don't sign the code of conduct, you cannot be a member, for example.
Okay.
Right? Now, if you don't sign the code, you sign the code of conduct and you renegade on it, I have no authority to come and say what are you doing. Now the SRO will have.
Okay.
Right? And I remember in the Chinese loan app scam, I was in the forefront of, because we were taking this industry where we did a lot of consumer communication. There were a lot of companies actually who were saying that if we have signed the COC and I had that stamp that I am part of this organization body, then a lot of the investors were looking at them favorably to say that you are not fraud because you've gone through due diligence.
Right.
Now with the SRO, if it has some teeth, and I don't know exactly how that will play out, but there will be some teeth to say that you are doing wrong, this is not okay. And if you don't do it, there will be penalty or I will report you, whatever there is however the RBI puts the rules out on that. The omnibus framework is there.
Yeah.
I think the people who are part of it, they will become they will at least have one level of check. Nobody can stop you from doing fraud. There will be a bunch of companies who will not be a part of any of these SROs.
Right.
Then it becomes very clear. So if somebody else, like a bank, wants to look at you and say that, do you want to partner with this person or not? Are you part of an SRO? You're not a part of an SRO. Maybe they'll look at it differently. So I think they're at least level 1 or level 2 fraud, I think, in those kind of things they'll be able to cover. Maybe level 2, level 3 will be a little bit still difficult to do and there will be a journey for that. So I do think the SRO is a good, it's a very good step forward. Like we are impacted, like 5% of the bad apples unfortunately spoil it for the balance 95%. Right. And we have been impacted because of that. For whether it is additional scrutiny, processes, and it's not to say that, it's okay, we'll do it, but it's just a hassle. But if you want to protect the large mass and you found something, you better do it. But it's only those 5% people who cause the problem. And the balance 95% have to suffer for it. So I think if the SRO, if it comes through, and it has come through, but once they're fully formed and the licensing is done and so on and so forth, and everybody then comes up with what their membership is and so on and so forth, I think it will be a huge step forward, at least to ensure everybody's coming within whatever is
a framework.
Yeah.
But so as the market matures, it's taken us this much time to come to this SRO level. So as the market matures, would you say fintechs, even though we are not defined right now, are in for stricter regulations?
But that's happening already maybe in an indirect way. If you are not part of it, for example, at some stage, if you're small, I guess maybe you're under the radar. If you get slightly bigger, anyways, you will come you do a TV ad or whatever else will come in the limelight. Then there will be a question. Doesn't matter whether you are regulated or not.
A lot of times you get pictured with the bad apples, right? What Vishal said, right? The bottom rung, right? The sub-Saharan African people, they're basically your polling, right? That's your vote bank. Right? One guy is getting screwed by certain fintech, will go to the local MLA and say this has happened. The local MLA will go to the chief minister and say this has happened, and it all painted with the same picture that everybody is like the same, right? So maybe there is a Chinese app issues, right? I'm still saying maybe is because I have a problem in terms of if somebody has taken the money, then you have to return the money. And why the fuss about not returning the money? So maybe there is a Chinese app problem. Then maybe there is something there. But what happened is with Chinese app thing is everybody has been painted with the same brush, right? And then started happening all
so it's
those,
maligning the entire segment sector.
And then white labeling of apps and white labeling of this, and all those things started happening in terms of it. So yes, one bad apple will lead to, but the problem is, as I said, there's so much innovation happening. What all of us has discussed is maybe 6-7 years back was not even there.
No.
Right now all of this is coming. I don't know if another different innovation like jar will come up tomorrow and people will be like, whoa, this is something new, which is maybe fin, health, logis,
something,
whatever tech included in some form of
Something.
it. So the problem is it's just moving very, very fast. And with AI, the entire thing is moving so much faster. The touch point
pace is exponential.
Yep.
Yeah, it's exciting, scary at the same time, but we've completely run out of time, with this roundtable. It's been fascinating. Thank you so very much, for all your candor, for the thoughts that you've shared, for things that you might not have wanted to say when you walked into the room, but you ended up saying regardless. And important to keep the conversation going. So thank you very much, Raghunandan, Manish, Kumar, Kaushal, Singh, Anuj, Ujjwal, Jain, and Vishal. Thank you so very much, all of you, for being part of the ET Sunacon Summit today. Thank you.